University of Missouri Extension economist Ron Plain is our hog market analyst this week. In just more than a month, we'll learn about the current number of those animals in the United States when the USDA releases its quarterly hogs and pigs report. The next set of data on international trade will come June 4th, but export demand for pork has not been strong. We examined that topic when we talked with Ron Wednesday morning. We also discussed the cost of meat for the consumer and production in 2016. But we started by asking about the recent rally in hog markets.
We've done well, Jeff. We've had higher hog prices for 7 consecutive weeks, and most welcome by producers. We started off this year in red ink, and we're back in the black, and so that's good. It's not really surprising. Usually this time of year, prices are moving higher.
It's a seasonal rally then?
Yes, several things driving it. One, weights are down. We've had 7 weeks in a row with weights less than a year ago. That's less pork, and that helps. But the other big factor is seasonally hog slaughter declines as we move from winter into summer, and that means less total pork on the market, and that's the big factor that's pushing hog prices up.
How are these prices affecting break-even margins for the producer?
Well, the cost of production's mostly tied to feed costs, of course, and corn prices has been pretty flat. We're looking at break-evens around 50 cents a pound live for hogs, or 65 cents a pound on a carcass weight basis. But with higher prices, the bottom line is getting better. We probably lost $3 or $4 per head on average during the first quarter of this year. And now we're looking at profits 20, maybe at times $30 per head this summer. So much better performance than earlier this year.
You had mentioned slaughter weights, Ron. Is there a reason behind that drop in weights? I know they had been historically high, but the trend of 7 weeks below the year ago, is there a reason for it?
Well, largely because a year ago they were so very, very high. Last year was a record for weights by quite a bit. We had record high hog prices and real problems with the PED virus. Hog numbers were down, and so it just created an opportunity and an economic incentive for producers to feed them longer and bigger last year. The economic incentive is not the same this year. We've got much lower hog prices. In April, at times, hog prices were half of what they were a year ago.
The USDA has released its expectations on what the U.S. will produce in terms of pork. What do those numbers show?
Well, USDA says a lot more pork this year than last year. They're forecasting 6.8% more pork. 2 reasons. One, producers made money last year, and so fairings are up and more sows giving birth. The other big thing is the death loss from PED is down sharply, so we're looking at pigs per litter sometimes 6% or more higher than a year ago. So a lot more pork this year. For 2016, they came out with their forecast, and they're saying a tad bit, about 1.2% more pork is what they're predicting for next year than this year.
Tell me about the price of pork for the consumer, Ron.
Retail prices in grocery stores averaged at $4.02 per pound in the most recent month reported by USDA. My expectations, that's probably going to creep a bit higher. Normally, somewhere around September gets us the highest grocery store prices of the year, and this time of the year, the odds are a little bit higher. They're going to be moving up than moving down.
Let's talk about pork exports. How bad are they?
Well, it's not been good. The most recent data is for March, and we were down 9% in exports in March compared to a year ago. A couple of reasons. One is the dollar's been very strong over the winter. We've seen some weakness there, and that makes us more optimistic, and USDA is more optimistic also about pork exports in the second half of this year. The other thing is we had some labor disputes in West Coast docks over the winter that slowed exports, so things are looking brighter, but we're still far short of what we were moving just 9 to 12 months ago.
Are all countries lowering their buys, or are there still nations that are hanging in there?
Well, Mexico's hanging in there quite well. The big decline in U.S. pork exports has been shipments to China and Japan. Those countries, those two account for the total decline year over year.
All right, what's your price forecast here as we move into June?
Well, we've got carcass prices back above $80 on good days, above $60 on a live weight basis. We should stay here for several more months, move a bit higher possibly. I'd say the low 80s for June, July, August average on a carcass weight basis. That puts it somewhere in the low 60s on a live weight basis. Seasonally, probably start to decline once we get past Labor Day. And right now, we don't think the fall low in prices will be as low as what we had this past spring.